Hi, good morning to all. In this video, I am going to discuss about support and resistance and the basics of support and resistance. Support and resistance are two important concepts in technical analysis. The support and resistance are specific price points on a chart expected to attract the maximum amount of either buying or selling. Prices move because of supply and demand. When demand is greater than supply, prices rise. When supply is greater than demand, prices fall. Sometimes prices will move sideways as both supply and demand are in equilibrium positions. But mastery in the concepts of often takes years of practice. Support and resistance can be found in all charting time periods, daily, for example, daily, weekly, monthly, and yearly. Traders also find support and resistance in smaller time frames like 1 minute and 5-minute charts. But the longer the time period, the more significant the support or resistance. To identify support or resistance, you have to look back at the chart to find a significant pause in a price decline or rise. Then look forward to see whether a price halts and or reverses as it approaches that level. As has been noted above, many experienced traders will pay attention to past support or resistance levels and place traders in anticipation of a future similar reactions at these levels. Technical analysis is not an exact science, and sometimes price will dip below the support levels or reverses before it gets to prior support level. Breaks the support level. The same is true for resistance. The prices may reverse before it gets to the prior resistance level or break it above. Breaks the resistance level. Price may reverse before it gets to the prior resistance level or break above it. In each case, flexibility is required in interpreting these chart patterns. This is why support and resistance levels are sometimes referred to as zones. Resistance occurs when an uptrend is expected to pause temporarily. Resistance occurred when the resistance temporarily pause due to concentration of supply. Support occurs where a downtrend is expected to pause due to concentration of demand. Support and resistance areas can be identified on charts using trend lines and moving averages. Support price is a price at which one can expect more buyers than sellers. Likewise, the resistance price is a price at which one can expect more sellers than buyers. Now we are going to see what is support. Previously, we tell us about the basics of support and resistance. Now we are going to discuss what is support. In a downtrend, prices fall because there is an excess of supply. In a downtrend, prices fall because there is an excess of supply over demand. Support is something that prevents the price from falling further. This is support. Support level is a price point on chart where the trader expects maximum demand in terms of buying. Coming into the stock or index, the lower prices go, the more attractive prices become to those waiting on the sidelines to buy the shares. At some level, demand that would have been slowly increasing will rise to the level where it matches to supply. At this point, prices will stop falling. This is support. Support can be a price level on the chart or a price zone. In any event, support is an area on a price chart that shows buyers' willingness to buy. It is at this level that demand will usually overwhelm supply, causing the price decline to halt and reverse. There is a maximum likelihood that the price could fall until the support consolidate, absorb all the demand, and then start moving upwards. The support is one of the critical technical level markets participants look for in a falling market. The support often acts as a trigger to buy. Whenever the prices falls to the support line, it is likely to bounce back. The support level is always below the current market price. Next, what is resistance? Resistance is the opposite of support. Prices move up because there is more demand than supply. As prices move higher, there will come a point when selling will overwhelm the desire to buy. This happens for a variety of reasons. It could be that traders have determined that prices are too high or have met the target. It could be the reluctance of buyers to initiate new positions at such rich valuations. It could be for any other number of reasons, but a technician will clearly see on a price chart a level at which supply begins to overwhelm demand. This is resistance. Like support, it can be a level or a zone. Once an area or zone of support or resistance has been identified, those price levels can serve as potential entry or exit points. because as price reaches a point of previous support or resistance, it will do one of two things: bounce back away from the support or resistance level, or violate the level and continue in its prior directions until it hits the next support or resistance level. The timing of some traders is based on the belief that support and resistance zones will not be broken. Whether the price is halted by or breaks through the support or resistance level, traders can bet on the direction of price and can quickly determine if they are correct. If the price moves in the wrong direction, breaks through prior support or resistance levels, the positions can be closed at a small loss. If the price moves in the right direction, respects prior support or resistance levels, however the move may be substantial. Resistance is something which stops the price from rising further. The resistance level is point on the chart where traders expect maximum supply in terms of selling. The resistance level is always above the current market price. The likelihood of the price rising to the resistance level, consolidating, absorbing all the supply and declining is high. The resistance is one of the critical technical analysis tools which market participants look at in a rising market. The resistance often acts as a trigger to sell.